What are the highest paying dividend stocks right now? And what are the best paying dividend stocks right now? Because believe it or not, those are two separate questions, because what most people do is look for dividend yield, and that is the problem. What you actually should be looking for is something completely different. I'm going to show you the difference. Let's go ahead and break it down. Let's start off with some of the highest paying dividend stocks, and then we'll get into some of the problems with some of these as we go through. The top one here is Two Harbors. It is a real estate company. The ticker symbol is TWO. Right now, they are paying close to 17% in dividend yield. For those that don't know, basically you are taking the percentage of the stock price and what they are paying you in dividends. I think right now they're paying you $1.18. You can do the math versus what the stock price is right now. That is very, very good. The typical dividend that is considered good is about 3 to 4%. Moving on, we have AG Mortgage Trust. They are paying, again, a double-digit dividend yield at 11%. Again, extremely good, extremely solid, extremely high paying. Next here we have AG Mortgage Trust, another double-digit dividend yield. Tongue twister there for you, paying at about 11% currently. Here we go again with two mortgage companies that might be a solid place to invest. At least we think so far. Next on the list, we have Sunrise Realty. This is the third mortgage company here on the list. Something has to be up with mortgage companies. This one is also paying a double-digit return here, at least for the dividend part of this, because they are paying a 10% yield. The next one here is paying an 8% dividend yield, and it is Resources Connection. Resources Connection is a consulting firm. I am usually a big fan, or at one point rather, I was a big fan of consulting firms as a stock investor, because they don't really have a whole bunch of overhead. It's just people, right? Not a whole bunch of equipment, not a whole bunch of tools, not a whole bunch of software, just people. And that was it. The company hasn't been doing, as a stock, hasn't been doing all too well, and we'll talk about why that is here in just a second. Quick time out. I know we've been talking a lot about investing today. However, if you don't know where to start or you haven't started yet, I have a free guide on how you can buy your first stock in just 20 minutes. To get that free guide, check out the link right here. All right, back to the video. Then we have Outfront Media. Their dividend right now is 5.43%. Very solid, but it's almost half of some of the companies that we've had so far on the list. And again, 5% is very solid. Now, so far you've had dividends from 7% all the way down to 5%. But not every company here is actually worth investing in. And that is because most investors zoom in and say dividend yield. That is all I want. And this is what I call the dividend trap. Because here's the thing. You can invest in a good, solid company that pays a dividend, or you can invest in a company that's not all that great that pays an amazing dividend. For example, let's go back to Two Harbors. Two Harbors is the one that paid the 17% dividend at the top. It's the highest one on the list. However, they're also down 11% in the last 6 months and down 18% in the last year. So let's do a little bit of math here. If you were to take their current stock price, which is roughly $10.42, all right? So say we bought 100 shares, and let's say we took their dividend of $1.80, 100 shares, we get $180, all right? So we have invested $1,042, and now we've gotten the dividend. We've invested for the entire year, and we get $180. That is pretty good. Except that if this were last year's case, we were lost 18%. When you combine that, losing 18% on the stock, our original investment of $1,042 is now down to $854.44. So we have lost our initial investment. It's come down 18%. All right, we get our $180, which is great, which now leaves us with $1,034.44. Overall, our total return is just 0.73%. That's it, 0.73%. I am chasing this dividend yield for a 0.73% return. I can get more from a savings account, but I can also get more from a better paying dividend stock. Where can I find such a stock like this? I've actually covered my dividend stock process. The process that I use is I look for companies that have momentum. Companies are moving in the right direction that just so happen to pay dividends at the same time. One example, just one example here is eBay. eBay right now in the last 6 months alone is up 17%. It has a 17% gain, which ironically, though, you know, even dividends aren't guaranteed, and obviously the performance, especially the past performance of a stock is not guaranteed, though it is history, right? But it doesn't guarantee future performance. But you can see, I would have made my money, right, in the last 6 months, not from dividends, but just from eBay's gains alone. But I would have gained from eBay, and then eBay has a 1.56% dividend. So the dividend isn't 17%, but I have a much better company, right? That is what I'm looking for. I want a good company that has shown that it has gains, plus it has a decent to solid dividend. If you want companies like this, companies that have shown that they can actually make money and have a good to solid dividend with it, then this is a video you want to check out next.